Let me start with a story that will make you check your beneficiary designations tonight. A man in Florida had a $400,000 life insurance policy through his work. He was married for 20 years. He named his wife as the primary beneficiary. But when he got divorced and remarried, he forgot to change the beneficiary. 6 years later, he died of a heart attack. The insurance company paid the $400,000 to his ex-wife. His current wife received nothing. She had to sell the house and move in with her parents. His children from the second marriage had no college fund, all because of a paperwork oversight that took 30 seconds to fix. That is not a tragedy. That is a preventable disaster. By the end of this video, you will know exactly how to name a beneficiary correctly, the 5 deadly mistakes that destroy families, and the simple steps to protect your spouse and children. I will break down the difference between primary and contingent beneficiaries, the nightmare of naming a minor child, and the per stirps versus per capita trap. You will learn the one question your insurance agent hopes you never ask, and the legal document that can override any beneficiary designation. If you have life insurance, a retirement account, or any asset with a beneficiary form, this video could save your marriage and your family's financial future. Let me start with the most important fact about beneficiary designations. They override your will. That is right. You can write a will that leaves everything to your spouse. But if your life insurance policy lists your brother as the beneficiary, your brother gets the money. Your will does not matter. The beneficiary form is a contract between you and the insurance company. It takes priority over any other document. That is why getting it right is so critical. Now here is the pattern interrupt that most people do not know. You need to name not just a primary beneficiary, but also a contingent beneficiary. The primary is the first person who gets the money. The contingent is the backup if the primary dies before you or at the same time. If you name only your spouse as primary and no contingent, and you both die in a car accident, the money goes to your estate. That means it goes through probate, which is slow, public, and expensive. Your children may not see that money for years. Name a contingent beneficiary, usually your adult children, a trust, or a sibling. Let me break down the 5 deadly mistakes. Mistake number 1. Naming a minor child as a direct beneficiary. If your child is under 18, they cannot legally receive the money. A court will appoint a guardian to manage the funds. That guardian may not be someone you would choose. The court process is slow and expensive. And when the child turns 18, they get the entire lump sum with no restrictions. An 18-year-old with $100,000 can make terrible decisions. The solution is to name a trust as the beneficiary. The trust holds the money and distributes it according to your instructions at ages you choose. Talk to an estate planning attorney. Mistake number 2. Forgetting to update beneficiaries after a major life event. Divorce, remarriage, birth of a child, death of a beneficiary. Any of these events should trigger a review of all your beneficiary forms. A study found that over 40% of people have not updated their beneficiaries after a divorce. That means their ex-spouse is still listed. That is a disaster waiting to happen. Make a list of every account, every policy, every retirement plan. Review them every year on your birthday. Mistake number 3. Naming your estate as the beneficiary. This is the default for many people who leave the form blank. The money goes into your estate, goes through probate, becomes public record, and can be used to pay your debts. That includes credit card debt, medical bills, and even taxes. Your family may get much less than you intended. Always name a person or a trust. Mistake number 4. Not understanding per stirpas versus per capita. These are legal terms that determine how money is divided if a beneficiary dies before you. Per stirpes means if your child predeceases you, their share goes to their children, your grandchildren. Per capita means if your child predeceases you, their share is divided among the surviving children. Most people want per stirpes. Check your form. If it does not specify, ask. Write per stirpes next to the beneficiary name. Mistake number 5. Naming only one beneficiary when you want to split among multiple people. If you want your 2 children to split the money equally, list them both with percentages. 50% to child A, 50% to child B. Do not just name both without percentages. That can lead to ambiguity and court fights. Now let me talk about the marriage trap. The single most common mistake is naming a spouse as beneficiary and then never changing it after divorce. But there is another trap. Some states have laws that automatically revoke a former spouse as beneficiary upon divorce. Not all states. Do not rely on state law. Change the form yourself. And if you are married but separated, your spouse is still the legal beneficiary unless you change it. That means if you die during separation, your estranged spouse gets the money, not your children or your new partner. That is a brutal reality. What about naming a domestic partner? In many states, domestic partners are not automatically recognized. Name them explicitly. Include their full name and relationship. And consider a will and a trust to reinforce your intentions. Now here is the hidden weapon. The beneficiary form is not the only way. You can also use a transfer on death designation for bank accounts and brokerage accounts. It works the same way. It bypasses probate. Keep a master list of all your TOD and beneficiary designations. Give a copy to your executor or a trusted family member. Let me give you a real-world example of getting it right. A couple in Ohio had 2 children. They each had a term life policy. They named each other as primary beneficiary. They named their 2 children as contingent beneficiaries, 50% each per stirpes. They also named a trust for their minor children in case both parents died. They updated their forms after each child was born and after they moved to a new state. When the father died unexpectedly at age 50, the mother received the life insurance money within weeks. No probate, no lawyers, no court. The family was protected. Now let me give you an example of getting it wrong. A man in California named his girlfriend as beneficiary on his IRA. He never told his adult children. When he died, the girlfriend received $200,000. His children received nothing. They sued, but the beneficiary form was clear. They lost. The girlfriend kept the money. The children hated her and hated their father. That is the cost of a mistake. What about the UK and Canada? In the UK, life insurance policies can be written in trust. That is even better than a beneficiary designation. A trust keeps the money out of your estate and avoids inheritance tax. Name the trust as beneficiary. In Canada, beneficiary designations are similar to the US, but provincial laws vary. In Quebec, beneficiary designations are treated differently under the Civil Code. Consult a local advisor. Let me also address the question of naming a charity. Many people want to leave a legacy. You can name a charity as primary or contingent beneficiary. That is a wonderful gift. But make sure your family is taken care of first. Name your spouse and children as primary. Name the charity as contingent. Now here is your action plan. Step 1. Make a list of every asset that has a beneficiary form. Life insurance, retirement accounts like 401ks and IRAs, annuities, transfer on death bank accounts, and payable on death investment accounts. Step 2. For each asset, write down the current primary and contingent beneficiaries. Step 3. Review each one. Is your spouse listed as primary? Are your children listed as contingent? Are the percentages correct? Is per stirpes specified? Step 4. Update any forms that are wrong. This is usually a simple online form or a one-page document. Step 5. Keep a master list. Store it with your will and other important papers. Tell your executor where to find it. Let me also talk about the mistake of naming a minor without a trust. If you name your child directly, the court will appoint a guardian. The guardian may be a stranger. The child will get the money at 18 with no restrictions. That is bad. The solution is a small revocable living trust. You name the trust as beneficiary. The trust says when the child gets the money, usually at 25, 30, or 35, it costs a few $100s to set up. It is worth every penny. What about the mistake of naming someone who predeceases you? If your primary beneficiary dies before you and you have no contingent, the money goes to your estate. Avoid that. Always name a contingent and update your forms when someone dies. Now let me give you a real-world example of a perfect beneficiary setup. A married father of 2 has a $500,000 term life policy. He names his wife as primary beneficiary 100%. He names a trust as contingent beneficiary. The trust is set up for his children. The trust says that if both parents die, the money is split equally between the children, with each child receiving 1/3 at age 25, 1/3 at age 30, and 1/3 at age 35. That protects the money from poor decisions and ensures the children are taken care of. That is how you do it. Let me recap the key takeaways. Number 1, beneficiary designations override your will. Get them right. Number 2, always name both a primary and a contingent beneficiary. Number 3, never name a minor child directly. Use a trust. Number 4, review your beneficiary forms after every major life event: divorce, marriage, birth, death. Number 5, use per stirpas to ensure that your grandchildren inherit if your child predeceases you. Number 6, in the UK, use a trust to avoid inheritance tax. In Canada, consult a local advisor. Number 7, keep a master list of all your beneficiary designations. Share it with your executor. Number 8, the cost of getting it wrong is your family's financial future. Do not gamble with it. Here is what I want you to do right now. Pull out your life insurance policy or log into your 401k account. Find the beneficiary form. Look at who is listed. If it is not exactly who you want, update it today. It takes 5 minutes. That 5 minutes could save your family from a nightmare. If this video helped you understand how to name a beneficiary correctly, hit the like button. It helps more people protect their families from preventable disasters. Subscribe and turn on notifications so you do not miss my next video, which is called The One Legal Document That Avoids Every Beneficiary Form. And comment below. Have you ever had a beneficiary mistake in your family? Share your story. I read every comment. Thanks for watching. Now go check those forms. See you in the next one.